So if you're messing with me,
Yeah.
I can go to court and say, give it to me.
So imagine that you signed a contract, 44 billion US dollars.
Every day.
Every day
Yeah.
that happens. And then you feel like, oops, I changed my mind. What can you do in this situation?
What did Elon Musk do when he bought Twitter?
And then change his mind.
Yeah. Signed and wanted to walk away.
Oopsie.
Oopsie.
And that's why we have you here, Kat, our experienced business lawyers, to take us through what really happened in this case.
So you know when you're at the dinner table what really happened, right?
Yeah.
Not all the rumors. We'll break it down for you. It's super simple. And we're going to learn.
We're going to learn.
So stay tuned because this is actually something that we can use in everyday life.
Yes. So let's go through this. Number one, what actually happened?
What actually happened is that Elon Musk wants to buy Twitter,
Mm.
right?
Which you can do.
So he presents a bid for $44 million. Yeah. Price per share of $54.20.
Dollars?
Yeah. And I'll let you see if you can capture what was it that made his fans laugh out loud when they heard that.
Mm-hmm.
See, put it in the comments if you know. Anyway, then once he's signed, because we talked about this, when you buy a big corporation, you don't sign and actually become owner the same day. It's like when you're buying a house. You look at it, you argue, you negotiate, then you sign with the sellers, and then you decide a day when you will move in.
Which is the closing in this case.
Exactly. So in this case, we had the signing, the contract, $44 billion. And then we had the closing when he was actually going to send the money and get the shares. And between his Tesla shares dropped in value and he had used those as securities for the deal.
Oh.
Yeah. And the overall markets are starting to shake. And he starts arguing that, you know what, you have too many bots, you have too many fake accounts. I did not sign up for this. It's a so-called material adverse effect.
Oh.
Material adverse effect is a buyer-friendly protection that says that if something really, really bad happens to the company between signing and closing, you can walk away. But that needs to be really fundamental. And what's really interesting for you guys to know is that Elon Musk did not do a due diligence before he signed.
What?
Yeah, I know. Because typically, before you sign a company, you want to look under like the facade.
Yep.
You want to actually enter the house, right?
Yeah.
You want to see the toilet. You want to look in the basement if there's mold or anything, right?
But he didn't do that?
No.
Okay, that sounds crazy to me.
Yeah. He did not do a proper due diligence at all. And the general rule is buyer beware.
Yes.
So if I'm buying a house and I offer you $2 million, and I'm like, I don't even have to enter the house. I'm happy. I'll buy it for $2 million. And then I enter the house and I see that there is mold. There's no toilet at all. Well, then you're going to say, sorry, you offered me $2 million. I said, come look at the house. You didn't even look at it. You offered me $2 million. You didn't say it was conditioned by a toilet, right? Then buyer beware. My problem. I still have to pay you $2 million, right? So that's the case we have here. He wants to walk away. He claims a material adverse effect. Twitter says, yeah, we have some fake accounts. We never lied about that. We never hid. You're saying fake representation. No. You could have found out. You knew this is not a material adverse effect at all. And then we look at the contract. Because what happens? He wants out. He doesn't want to pay.
Yeah, of course.
He had a break fee of $1 billion. So he says, fine, I'll take it. I'll just pay you $1 billion and walk out. It's better than buying it for way more. Because you're not worth $44 million. And Twitter says, or Twitter's lawyers.
Don't mess with the lawyer.
Yeah, don't mess with the lawyer. They say, hold on. There is a specific performance clause.
Oh.
And that means that when you have something that's unique, so if I'm buying 20 Budweiser beer from you, I can buy them somewhere else and just you pay me damages if it costs me more, right?
Yeah, of course.
But if you have a specific painting that's unique, So you can't just say, I don't want to sell it to you, and I go buy it somewhere else, right?
No.
So then we can have in the contract that there is a specific performance. So you actually have to give it to me. I can go to the court and say, you have to perform in accordance with the contract. It's not enough that you pay me damages. I want the painting. And then the judge says, you know what? Give her the painting. It's like a mom and pop coming in and saying, no, that's your sister's.
Yeah.
So that was the case. They had the specific performance in the M&A contract. So he had to go and follow through. He could not use the break fee and just pay $1 million. He tried. He couldn't. And they use Delaware as a jurisdiction, and they are very, very seller transaction friendly. So he knew, his lawyers came down and looked at it, and the case was ongoing. And they said, we won't win. Let's just settle. Let's just buy Twitter. $44 million, go.
So he had to do it.
He had to do it. Specific performance. And this is something you can use in your own contracts, right? So if we contract and you're going to paint that painting, and that's really key, I want that painting and I want it by March. Put a specific performance. So if you're messing with me, I can go to court and say, give it to me. Or if you're selling your company and the buyers promised you and made all of this and giving you a really good price, and then things start happening shaky on the market perhaps, or with his personal finance before you close. If you have a specific performance, you can go to the court and say,
that is super good.
Now you know exactly what happened. It was the clause. And you know what? The beauty, it can end on a really, really good lesson, a good learning here. Elon Musk is the richest person on earth.
Yes.
He has unlimited access to lawyers.
Yep. That was my question.
And still, he could not get out of a contract he had signed. And that's fair. That's balanced, right?
Yeah. Because my belief is that he should be more equipped. I mean, with lawyers and such things.
But he's a high risk taker.
Yeah.
So he was probably about, Super Bowl, let's go. I'm sure some of the lawyers said, you know what, this and that, this is included in the contract. They were like, So he was not above the law, and I like that. Like justice. We all have to comply. If we have a binding, clear contract, it is what it is.
Yeah, it's the same for everyone.
Yeah.
So, super good.
Now you know exactly what happened and how we all can use it in everyday life.
Yes, and as we know, he still owns Twitter.
Yeah.
Or X, as it's called today.
Yeah. And super excited to see where he will take it. And let us know if you have any other, what really happened, huh?
We want to know about this. Just drop comments below and we will do research.
Like we're going to tell you about Steve Jobs' illegal salary cartel, right?
And not celery cartel, salary cartel.
Let's go.
Let's go.
Hej då!
Hej då!